right, so one of the things your book talks about, so with a partnership, first off, the tax form that is used for a partnership, I don't like this, I don't like blue. I mean, I like blue, I just can't see very well. So we'll get the pen. So the tax form that is used that partnerships have to file is called a Form 1065. So individuals file a Form 1040, partnerships file a Form 1065. And again, the majority of the 1065 is simply just kind of an income statement, right? All those items of income minus all of our deductible expenses. But all of it goes and gets reported on a Form 1065. Within the Form 1065 is produced these K1 forms. These are what are issued to partners. So if a partnership, so this is filed by the partnership, if a partnership has 100 partners, they're going to generate 100 different K1s. Each partner is going to get their own Form K1 that reports all of the income, ordinary income, as well as separately stated items of that partnership. Now, one of the partnerships are they're popular because they're easy. Anytime two people go into business together, they automatically form a partnership, right? So if you don't do anything else, you don't file any other business forms, anything, you just automatically are a partnership. So it's kind of the default for any type of business where there's more than one person, and that would include a married couple as well. So anytime there's more than one individual. One of the disadvantages of a partnership, so one of the advantages is it's easy. One of the disadvantages is there's a lack of liability or limited liability. So that means that if the partnership gets sued for some reason, there's some sort of negligence and they get sued, the individual who's suing the partnership can go after the personal assets of the partners. So there's no barrier between the partner and the partnership with regard to liability. Now, the states have sort of corrected this by forming these limited liability companies. Limited liability companies, limited liability partnerships can still have the partnership tax form. Okay, but what it does is it then creates that layer of liability. But that is one of the disadvantages of partnerships. Like I said, the advantages, it's easy, it's just sort of automatically created when you go into business with somebody, but the disadvantage is if bad things happen, they can come after your personal assets, unless you create like a limited liability partnership which set up that barrier between the individual and the partnership itself. So I thought we were already starting in on the other stuff, so I guess